Hey, can you fix up that charts of accounts?
Wait. Fix up the what? Hey friends, welcome to my channel, Accounting Masters. In this video, I'll be talking about what charts of accounts is, so let's go. Before we talk about double entry bookkeeping, I would like to talk about charts of accounts. Charts of accounts basically is an index of all the accounts for that company. They're coded accordingly to their account type. When we record entries into the accounting system, you will notice that the accounts affected will have their own ledger account containing a record of business transactions relating to that account. These are called subledger accounts. The separate record within the general ledger will be assigned to a specific asset account, liability account, equity account, revenue account, or expense account according to the charts of accounts. If you have not checked out the video on the 5 different types of accounts, the link is at the top right hand corner. So for example, a bank account, which is an asset, will have their own subledger. Accounts receivable, an asset, will also have their own ledger. Loan, a liability, will have their own ledger account, etc. You get the idea? For bigger companies, due to the high volume of transactions, they may have a separate subledger for each customer for accounts receivable, and have a separate subledger for each supplier for accounts payable. Over the accounting period, each of these individual subledger accounts will accumulate debits and credits as they're posted from their related journal entries. A general ledger is where all these individual subledger accounts will be shown together with all of their transactions during that accounting period. Each account's ending balances will go to the trial balance. I will explain more on general ledger and trial balance in the next video, so be sure to hit subscribe and hit that notification bell. We see that these accounts are all grouped. The order will be usually from balance sheet to income statement items. For example, assets, liabilities, equities, and then revenue, and then expenses. Depending on the accounting software you use, you can change the account code accordingly to your preference, but they should all be grouped accordingly to their account types. You can also set the account codes accordingly to your preference. Usually, there will be a unique set of numbers assigned for each account type. So let's take a look at an example of a chart of accounts. Here we have Joe's Electronics Limited charts of accounts. So you see here, for assets, the coding would be from 100 to 199. But as you can see here, there are not that much asset accounts under Joe's Electronics Limited. We are only using up to 160. So from 200 to 299 are liabilities, and from 300 to 399 are equity, and 400 to 499 are revenue accounts, and 500 to 599 are expense accounts. And keep in mind that these are all subledgers. You see that the charts of account, so we have the code on the left side and the name of the account, which will appear on the balance sheet and the income statement, and then we have the type. And then right here we have the description, which basically describes what the account is. So for bank accounts, we see here World Bank Co., Big Bank Co. are bank accounts. We see that 110 to 115 are fixed assets. And then here we see that this account is inventory, which are purchased items for resale. Accounts receivables are sales paid on credit and still outstanding from customers. Other receivables, debts owed to companies. And then down here, let's take a look at the accounts payable description are purchases on credit and still outstanding to suppliers. Accruals, expense incurred but not paid yet. Then we go to equity here, share capital, total value of shares purchased by the shareholders, and current year earnings, which is this year's earnings or loss. And we have sales revenue here, which are streams of revenue separated into accounts. We have sales revenue computers, which are sales from computers. We have sales from computers accessories. We have sales from other electronic parts. And same for cost of goods sold. It's actually divided into each segment. We see computers, computers accessories, and other electronic parts. And then down here we have operating expenses, right? So accounting, which are fees for bookkeeping and preparing financial statements. Let's take a look at another one. Depreciation and expense for fixed asset that has been used during the period for the company. And legal expenses, expenses on any legal matters. Salaries, payment to employees for their work done. So basically, each account will have their own description, like a reminder of what the account is. So the bookkeeper or the accountant can know immediately what to put or what items to record under which accounts. And that's all for charts of accounts. In the next video, we will be talking about bookkeeping, double entries, and debits and credits, which are all very important topics in accounting. So be sure to check that out. Hey, if you got any questions, please leave a comment down below. Hit that like button. Don't forget to subscribe if you haven't already by clicking on the subscribe button together with the notification bell so you will not miss out any new videos on this channel. Thanks, and I'll see you in the next video.